Hi, this is Nick with the Jenkins Group powered by eXp Realty. And today I want to talk to you guys about how buyers can lower their interest rate. I know we've got super high rates right now and it's keeping a lot of buyers from getting into the home of their dreams. So I think this is a really important topic right now, whether you're selling a home and buying another one or just looking to get into that first home. First off, one of the easiest and most common accessible ways for everyone is to get either a temporary or a permanent buy down. Now, that's going to depend on your current financial situation. A temporary buy down usually lasts for just a couple of years, but it lowers your payment by a much more significant amount. So a lot of times people will do this in hopes of refinancing a couple of years down the road and locking in a much lower rate if things improve in the marketplace. So that is a temporary buy down, and it's a great option for a lot of buyers, something you can definitely discuss with a lender. The second is, of course, the permanent buy down, which is usually a much smaller buy down, but it lasts throughout the entire term of the loan. So it may last you for the entire 30 years, but it'll be less than 1% normally that you can get it bought down by. Both of these require a little bit more upfront cash, but they can also come in the form of a credit from the seller, especially if homes are sitting on the market a little bit longer. There's usually an opportunity to negotiate and ask the seller to get a buy down for you and keep your payments as low as possible. The second thing that's important is making sure that you compare lenders. There's a lot of options available to you, whether it's mortgage brokers, direct lenders, or some of the online lenders that are really offering competitive rates in today's market. Make sure that you compare a few of those options and weigh the pros and cons. Are they going to close on time is extremely important during the buying process, but it's also important to get the best possible rate and make sure that you're going to set yourself up not to be overpaying for many years to come. Finally, it's of course the one that everyone knows, which is increasing your down payment and potentially boosting your credit score. A lot of times you can do things like paying off student loans or paying off credit card debt to quickly boost your credit score, and maybe it makes sense to take a little bit of a credit from the seller to cover your closing costs and then use that money that you were going to use towards that to pay off a credit card or pay off student loans and improve your credit score. It might bump you into the next category and get you a little bit better of a rate. And same thing with down payment. Sometimes having a higher down payment is going to get you a better interest rate. It also may be able to put you in a position where you don't have to pay for mortgage insurance. So talk to the lender about those two options and make sure you're working with somebody who can explore those both with you and let you know how it would affect your financial picture to potentially come up with a little bit of extra money at closing or before closing to get a better credit score or to bring more money to the closing table. Of course, these are just a few strategies. It's important to work with a professional, both real estate agent and a fantastic lender, to make sure that you set yourself up for success as a buyer. So please feel free to reach out if you need contact information for a lender, or if you just like to chat about your situation, no strings attached. You can reach me at the information below. Thank you so much for watching and have a great rest of your day.